Imagine pulling up to a gas station pump, swiping your card, and seeing a flashing message that reads, "Transaction suspended." You know you have money in your balance, and you haven't changed your spending habits in years. But when you log into your mobile banking app, your entire balance is completely grayed out. There is no email alert, no automated text, and no courtesy call from a customer manager. What you are experiencing is a defensive lockdown that is currently hitting thousands of senior bank accounts across the United States. It isn't happening because you ran out of money or because you fell for a scam. It is happening because an automated artificial intelligence algorithm flagged your daily routine as a high-risk security threat. Today, we are exposing the 5 hidden automated tripwires that cause these immediate account freezes, the exact federal safety protections banks use to block your access, and a simple 10-minute shield you can activate today to keep your money accessible. Here is the reality behind this massive shift. Banks are being forced to act as frontline watchdogs by federal regulators. With sophisticated AI voice cloning schemes stealing billions from retirees annually, agencies like the FBI and the FTC have put massive pressure on traditional financial institutions to stop unusual transfers instantly. To comply, ancient humans bapped, banks have deployed aggressive monitoring algorithms that build a digital footprint of your life. They track the exact geographic locations of your card swipes, your average grocery bills, and your historical check amounts. The problem is that these systems are incredibly rigid. If you try to perform a completely honest transaction that happens to sit outside your historical footprint, the algorithm doesn't ask questions first. It acts as judge, jury, and executioner by locking your debit cards instantly, leaving you to deal with the bureaucratic fallout. Let's dive straight into the actual regulatory guidelines that give banks the power to do this. It is anchored in a federal framework known as FINRA Rule 2165, alongside a wave of localized safe harbor statutes now active in more than half of the country. These laws were specifically written to give financial institutions complete legal immunity when they step in to block a transaction. Under these provisions, if a branch representative or an automated algorithm suspects that an older adult is facing financial exploitation, the bank is legally authorized to place a temporary administrative hold on your withdrawals for up to 15 business days. That is 3 full calendar weeks where your money is completely out of reach. And because of strict anti-money laundering compliance laws, frontline customer agents are often legally restricted from telling you the exact security trigger they are investigating when you call. Let's look at the specific tripwires that are causing these automatic lockdowns. The first major trigger is using digital tools like Zelle or Venmo to send cash to a brand new recipient. Because of the massive wave of grandparent phone scams, the system treats a fast transfer to an unverified name as an immediate red flag. The second major tripwire involves unusual cash withdrawals. If you attempt to withdraw several $1,000s in cash without a recorded history of doing so, tellers are now explicitly trained to delay the transaction, and whatever you do, never fall into the dangerous trap of structuring. If you need $15,000 for a home project, do not withdraw $8,000 on Monday and $7,000 on Wednesday, just to avoid filling out federal currency transaction reports. The algorithm flags that pattern immediately as a federal compliance violation, and it will trigger an automatic account freeze that takes weeks of paperwork to undo. Fortunately, there is a built-in legal escape hatch that can prevent a 15-day administrative freeze from turning into a massive headache. It is an official configuration called a trusted contact designation. This is an administrative feature where you legally name a trusted adult, such as an adult child, a longtime family attorney, or a close friend, as an alternative point of contact for the bank. This person has absolutely zero access to your money. They cannot sign checks, they cannot view your balance, and they cannot make decisions on your behalf. All they do is act as a verification anchor. When the bank's automated algorithm flags a large transaction as suspicious, instead of locking your account for 3 weeks, compliance officers can immediately call your trusted contact. Once that contact verifies that the transaction is planned and legitimate, the hold is dropped in minutes. You can set this up completely for free by logging into your secure online profile or stepping into your local branch. The strategy for keeping your assets safe is clear. The banking grid is automated, so you must be proactive. File a trusted contact on every active account you own, log into your dormant savings profiles at least once every few months to maintain active status, and always give your local branch a head start notice before attempting any large, out-of-ordinary transaction. Before you close this tab, click that subscribe button right now and turn on the alert bell. Regulatory frameworks, banking compliance rules, and consumer tax thresholds are shifting rapidly throughout the year, and we track them daily so your households stay prepared. If you have an elderly loved one or a neighbor who relies heavily on a single debit card, click the share button and pass this video along to them today. Thank you for watching, and I will see you in the very next update.